Hi, welcome to the Market Alert for Wednesday, the 17th of March 2021. So big tech trumps small caps as inflation outlook hits a 13-year high. Again, it's this inflation. And speaking of inflation and asset bubbles, have a look at this. It's gone parabolic, Canadian housing in one shocking chart. And that's because in Canada they have this curious thing where they're allowed to just withdraw the equity from their houses. It's called a line of credit. And all they need is an assessment by a regulator or an assessor from the building society or bank who says, yes, your house is worth this, and now you can have this line of credit. And this is why you will see that Canadians have one of the greatest debt levels, personal debt levels in the world because of this. In the UK, you have to remortgage through solicitors. But in Canada, you can have what's called a line of credit. Very dangerous game, as you can see. And of course, what you have to do is to keep the bubble going, you have to keep increasing the valuations. And interestingly enough, crude oil is out again today, the inventory figures, and WTI jumps back above $65 after crude stocks unexpectedly dropped. And that is out today. You can see here that they're forecasting 2.8 million, down from the 13.8 million surplus that they had last week. Also today we've got the FOMC at 6 p.m. and it's March, so that means there will be a press conference. They have one each quarter, and you can see that down here. So again, the market may be very quiet today, waiting for Powell. Meanwhile, yields continue to move to the upside. The 10-year, there you can see, is at 162. We've been as high as 163, I think. 162, yeah, 163 there. I thought we got 162.9, but 163. And yeah, that's continuing to move to the upside, which will be interesting to see what Powell's got to say about this later on today. However, the implied volatility moving to the downside there, not quite breaking the low of 1603 that we've had, but 1681 for yesterday. So again, the lower the implied volatility goes, the bigger the correction the market will put in. And again, we're green all the way as far as the color-coded version of implied volatility is concerned there. So let's have a look at the markets, see where we are overnight and yesterday. We'll start off with the Dow. I'll just get the right chart, and we can see very narrow range yesterday. Like I say, the market's waiting for Powell to see what he's got to say at 6 p.m. later today. So that's why you're seeing this. Interesting, though, that the volume is very high I'll say very high. It's higher than the previous day and less in range. So there is a bit of selling pressure around in the Dow. However, prices have failed to close below the 5-bar moving average. Come down, had a look at it overnight, and starting to move back to the upside. It'll only take an announcement from Powell to send these markets back to the upside and in that upward trajectory that they've been in since 2009, March of 2009 to be precise. So the DAX is sideways, which is why it's been uneventful for the last few trading days. And you can see that the range is getting narrow, apart from Monday where we had a spike down, which you can see here. Yesterday, the low much higher than Monday. So price is exhibiting this sideways range. And if you to draw in here, you can see that sort of range there. Again, consistent with the market having a breather, and also waiting for some other support. And you can think that 1.9 trillion stimulus has already been released. Incredible that the market's trading sideways, unless it already factored it in here with this big bar up to this point. But you can see how the market is not being driven on fundamentals, but on news of the next stimulus check, which is quite something, isn't it? And let's have a look overnight. We've got the market sideways, which you'd expect, sitting at the DP level, resistance at the 200 MA, but in the last hour prices have managed to get back above the DP, trading up to the 200 MA there as well on an increase in volume, but just stuck in a range there as well. Need to get above the BRN here, and if we just compress the chart and have a look, we've got 50 points up to the high, and we've also got about 75 points, 80 points down to the previous day low, depending on what they do when the futures market opens at 7 a.m, which is 25 minutes away from where I'm currently recording. I haven't got the afternoon session for yesterday recorded. For some unknown reason it didn't work, so given that the market was so quiet yesterday, I'm just going to have a quick review by looking back at the chart here, and you can see that it was volatile to start with, up and down, and eventually we had a buy signal where the market traded up. And in fact, let me show you the first part of the morning. It doesn't seem right not actually reviewing it this way. We saw that the futures market moved to the upside strongly through the DP and the 200 MA as well. And I'm going to fast forward. You've already seen the picture, so you can see the market was holding there, doing their best to hold this market, and moving to the upside initially. Then we saw the selling coming into the market here, not closing quite back. The reason this bar's not colored is because it closed on the 20 bar moving average, and it's sort of what do you do if it closes on? Is it a red or is it a green? So we left it neutral when programming this in, but you can see there that price is then moving back to the upside, trading sideways, hit with further selling, and then we had the potential buy signal, but that one was cancelled. We got further selling coming into the market, but the volume's starting to drop off now, so the battle at the open is more or less sorted, and then prices start to move to the upside. Again, we start to see an increase here in volume as it does this. Interestingly enough, the bar that moved to the upside and reversed was on lower volume than the bar that followed. So we've got some selling pressure at this resistance area, which I drew in here at 14,541. Prices then attempted to move through the resistance, which you can see there, but made no progress. And when I saw the potential weakness coming in with at least 90% of the volume of the previous bar and no interest in wanting to move higher, I decided to pull the trade, which is the right thing to do, even though prices did move slightly back up towards creating another double top, which you see here to here. They then moved sideways to lower, and that's how it remained. And I'm just going to fast forward through this. You can see how quiet it became. Again, we've got 4 or 5 point moves over 2 minutes, so very, very quiet. And it wasn't much different in the afternoon. I think the reason for this, like I say, the stimulation checks are in the post, but also we've got the Fed speaking later today, and then yesterday afternoon, as I say, for some unknown reason it didn't record, but you didn't miss a lot, because again the market was stuck in a very tiny range. It pulled back, and then we had a bit of a rally to the upside, and then some profit taking down, but again only about a 35 point range at the most there. So like I say, the market's waiting for the Fed, and it's going to be interesting to see what he has to say about this. This is going to be the key thing here of the 10-year Treasury note interest, because it's the rate, sorry, not interest, is continuing to move to the upside. If we go to 1 month, in fact, let's just go out to the last 3 months, and you can see the issue that we've got here. That 1.75 area that JP Morgan talked about is critical. 2% as well if we break 1.75. But like I say, the market's likely to be quiet today, waiting to see what Powell's got to say with regards to this. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.